Welcome to EntrePods, the most cutting-edge podcast for entrepreneurs and investors. We answer the hottest question today. So now what? We are radically civilized with a focus on doable solutions that make the most positive impacts in your business, financial, personal, and community life. The world right now belongs to entrepreneurs. Today, we'll show you through our expert conversations that matter, the limitless opportunities you have right now to live the life of your dreams. The best version of you and your business starts now. Welcome to EntrePods.
Hello, EntrePods. I am so excited to be here with you today, and we have a really amazing guest that's going to provide so much value, and I'm just so excited to introduce him to you. He spent the first 12 years, like many of us entrepreneurs do, owning multiple businesses, but then he was still stuck in the hamster wheel. Even though the cash was coming in, he was having cash flow issues. He had overwhelming stress about banks and the government having most of the control over his income. And then through his journey, he learned how to do leveraged life management. And that's what we're going to learn about today. We're going to learn about wealth building and finance and we've talked about this a lot here, about mindset when it comes to money, how we think about money, the majority of people, is not how the ultra rich think about it, how they use money. And so he has spent years reading and cracking the code. And so I just want to welcome you, Sean Adams with Leverage Life Management, to the show today, because this topic is more important than ever to talk about. So welcome to the show.
Jennifer, thank you so much. Really looking forward to this conversation.
Yeah, me too. So tell us a little bit about that. So you started out, and what types of businesses did you have when you first started out?
Yeah, the first company I started was actually in high school, right before high school, actually. I was pushing the lawnmower around the neighborhood, typical kid trying to hustle and make some extra money. And I actually turned that into a full-fledged home service business. And we did everything from exterior contracting work to some interior renovation work and everything in between. And I would say about the first 8 or 9 years of my career, that's what I spent building that contracting business. So it was blue collar. It was very interesting. It was hands-on. I loved being outside, and I learned so much. You know, you hear people talk about the real world MBA. That was it for me. I cut my teeth and learned about sales and marketing, and felt like I made every mistake humanly possible in business. I had no mentor to look up. No one on either side of my family owned any kind of businesses. So I had to learn this the hard way. But that's really what got my entrepreneurial juices flowing and was where I learned everything to start with.
I think it's really great. I've talked to so many people now, in our 200 plus episodes, and many people start like that. They start either with a route when they're a kid, like selling some magazine or newspapers, or they're mowing lawns, or the lemonade stand. You hear that all the time. And it's so important for kids to be able to learn that, because then you start to get a taste of your freedom. I remember laughing my butt off at the Jimmy Kimmel, right? I think it's cruel, okay? But it's also funny how he has the parents tell the kids, I ate all your Halloween candy. And the parents film the kids losing their ever-loving minds about losing their candy. And many of the times I'm thinking those brats would have gotten beaten till a half an inch. But then, I was talking to someone, they said, well, really, that's the first time kids learn to work for something. And I think, oh yeah, well, actually that is true. They had to work for it in a certain way. And that was their hard effort, And so that's why it meant so much. It had nothing to do with the candy. It was like, I just had to walk around forever and do that. And you just ate all my candy. So, okay. So from going from that and then building a business off of that, which showed incredible, spirit on your part. Tell me a little bit about when you started to realize that what you were taught about money wasn't really how you're supposed to deal with money.
Yeah. So I named my company Leveraged Life Management, right? And that leveraged is the key piece of this. I started learning about this concept of using leverage for purchasing a down payment on a property, right? Or using leverage by delegating to an employee. It was this idea of, if I'm going to lift a car by myself, it's going to be really hard to do, right? But if I put a cinder block there and a long lever and I use that, one person can do that with relative ease, right? So it's this idea of being able to leverage tools and strategies to my advantage. And on the flip side of that, it was really about over leveraged. And that was where it started for me. I started seeing all these areas where I was over leveraged, where I had a single point of failure, where all the business processes were in my head and they had to go through me. And I started realizing as I talked to successful people that they were looking at banks, they were looking at financial systems and accounts and structures, and they would recognize first where the over leveraged points were. And they would go, I want to take full control. How do I put myself in that best position? And it was such a mindset shift for me. I never thought about that. I just, I was like 16, 17 years old, and I got my bank account and I went and got my line of credit and the credit card and did all the things, the check boxes that everyday Americans are told to do. Right. And it was amazing how far away that was from what the ultra wealthy were doing. They were looking at banks and going, do you know how much you're over leveraged by your average bank? Like, do you know what they're actually doing with your money when you put it into an account there? And that's what really started for me. They kept talking about being their own bank and privatizing their lending and having full control over their money. And it blew my mind on how they thought about this. And they taught me about how banks are actually where they're putting their cash, where they're using and leveraging every dollar to reinvest in other customers, right? They're the kings of the other people's money. Like when they're making investments or they are funding some deal, they're not using their money to do that, right?
Right.
And most people have no idea. They just think that the banks are an endless pit of cash, and it's not really their cash that they're using. So that's really where it started for me.
Is just learning how the banks do it. So how did you take that? Okay, so and then this is where we need to bridge the gap, because I think many people understand, many people in our audience who we're talking to, they understand this concept. They're all entrepreneurs, they're real estate investors, but it is the difference between, okay, this is what the banks are doing, but what can I do where I'm at right now? Like, how can I start this process? Like, I get it, but then I don't get how I can implement this now, considering I've set it up the old way. And you did that. You had it the old way, it wasn't working for you, and maybe your credit was suffering, or other things are happening. So how can we stop that cycle to get it on the better, healthier cycle?
Yeah, so I'll talk about the strategy that I really focus on with my firm and what I was taught and why I find this to be so fundamental and helpful for an overall plan. And by no means is this the only way to go about it. It's just one strategy that's worked really well for myself and some clients. So the idea with the banks is that in addition to them taking your money and lending it out and kind of that whole fragmented banking side, there's also this concept of where they position their long-term cash, right? And so I started looking at, okay, where am I going to put my cash? I sat down with financial advisors and I got the same cookie cutter approach. Stick it in a 401k, put it in a SEP, put it in an IRA, so on and so forth. And they didn't have the appeal that I wanted. There was some tax advantages, but there was a whole lot of restriction. And I was tied to that stock market regardless. And I was on that roller coaster no matter what happened. It felt very out of control for me. And it was very, overwhelming. And so what they were telling me was that the banks, they can't afford to put their money in these volatile sources, right? So in addition to their everyday lending practices, they also position their long-term cash, believe it or not, in these large pools of what's called bank-owned life insurance or corporate life insurance. And these are simply policies that are mutually owned, so they're not on the stock exchange. And they would position cash. They would take out policies on their key employees, like an insurance policy on their staff, and they would fund hundreds of millions or billions of dollars into these policies for a number of reasons. One, because that key employee was very important, and if they left, they would be screwed. So they had a death benefit and some protection there. But more importantly, once the cash that they took from their accounts and they put it into these policies, I would say it gets kind of like supercharged or superpowers. The mutual insurance companies would provide them a minimum of 4% guaranteed growth on their money in dividends and interest. So they started to see that, like, okay, I can get guaranteed rate of return outside of the stock market. And maybe I want to invest in the stock market as well, but I've got this safety net, this warehouse where my cash can sit. And it's also tax advantage. So you do pay in with after-tax dollars, but all of the growth and the gains on that money is actually can be accessed through policy loans. And you can use the money tax-free if you structure it properly. And then the last piece was really the protection, because technically speaking, a contract in insurance is a private agreement between you and the carrier. It's not something that goes through an underwriting process like in the banking world where your credit score is involved. It's a private ordeal that's actually off of your balance sheet if you want it to be. So they love the fact that they could almost store cash here on their own terms, completely private. And it was a great way for them to be able to have that super liquid, flexible savings account. And what I realized and what, my mentors were teaching me is there's no limit to this. Anybody can do this. You can do this if you make, if you have a couple $100 extra per month. This is not something reserved for the ultra wealthy. Unfortunately, this strategy has just been left up to advisors that only want to give it to the ultra wealthy. But my part of my firm is to bring this to everyday small businesses and entrepreneurs who can really appreciate the autonomy that these accounts give you, but don't have billions of dollars to put into them. And you can start at any size. So when you talk about the practical application, believe it or not, these policies can be set up for, the everyday small business that's just doing a 6 figures and they're growing, or a startup, and anybody in between.
And that's why I wanted to have Sean on the show. Everybody, we're talking to Sean Adams, and he is with Leverage Life Management. And you guys are going to be able to get a virtual course on this, a virtual crash course, and a bunch of other things. We'll put all the links at the end of the show. But I specifically was so excited to talk to him because, as you know, we've had other people on the show, and we've talked about some solutions like this, but you have to already be an accredited investor, or that is who they're looking for, people that are already at that level. And that really knocks out a lot of people who are just now going, you know what, maybe I want to get into Airbnb. Maybe I need to get into real estate investing. Maybe this has really not worked for me, the lockdowns, which is basically everybody, right? So this has not worked for me, but I need to think of other things because we've all had a little bit more time to really seriously think about what we're doing with our lives, with our families, with our businesses, where we're putting our passion. And I want to reiterate this, no matter where you're at, you can start this, and it is a safer, less volatile option, and that also provides liquidity. So keep that in mind. You're not locked into something that is so restricted, you can never get it out in case of an emergency or you need it to grow. So let's talk about that a little bit. Works. How does life insurance work? So how can you protect yourself and your legacy with this type of product?
Yeah, 100%. So Jennifer, I'll just go through a really high level example here. There's 2 main types of life insurance. There is term insurance, which is for a set period of time, a term, as the name suggests. And then there's what's called permanent life insurance. And that's whole life. There's universal. There's all different kinds within that. The type that we focus on, and for the purpose of this conversation, we're going to drill down on the whole life side, which means it's in place for the entirety of your life or up until you die, whether that is prematurely, if God forbid something happens 6 months from now, or you live to a nice, healthy, long life and you die of natural causes at 100 years old, right? Any point in between, these whole life policies are in place for. And so the beauty of life insurance, because we should all have some sort of coverage out there, because as a contributing member of society, we bring inherent value, whether that is we're a caregiver for our children, or we own a business and we support other people in our families, or we work a job and we're a real estate investor, an agent, anybody in between, right? If you are contributing, you're working, you're making an income, that is an insurable asset. Your income is something that other people depend on. Therefore, it can be insured just like you can insure your car, your home, your health, and anything in between, right? The unique part about whole life insurance is, I always use the example of, let's take your car insurance, for example. We all know we need car insurance. We pay, let's say it's $100 a month into our car insurance. We pay $100, and in return, the insurance company gives us coverage in case something happens, right? But that $100 is purely an expense. After it leaves our account, it just evaporates, right? Even if we never make a claim, we never get in an accident for 30 years, we're still paying that $100 a month, and it just goes as an expense, kind of like renting. With life insurance, because the coverage only kicks in when you die, you can actually capitalize or accumulate the payments that you make during your life. So most people look at life insurance, they go, well, I don't want to spend a whole bunch of money on something that the next generation is going to get. What about the living benefits? I want to care about things now. And so if you structure these policies correctly, like big banks and ultra wealthy people do, is they can actually overfund, pay more than expected on that premium into a whole life policy, and more cash shows up in what they call cash value. So basically, if you every month that you make a payment and you don't die, essentially, that policy stays in force, and the cash that you've paid in to get your coverage actually accumulates. And that cash accumulation, the cash value, that's what's getting guaranteed growth. That's what's giving you liquidity. It gives you tax advantages. It gives you protection, right? And so we all know we need that life insurance, but why not optimize it, right? What if you could take any of your other expenses and actually build accumulated value, something that's going to get guaranteed growth, and you can use it on your terms? So there's a million and one use cases. I know your audience does a lot with real estate investing. That's a huge market for us that we speak to all the time. Investors love this because of the leverage component. They put cash in here. They can take loans out against it at their discretion whenever they want. You can use this to go buy a new boat, for health insurance, for health coverage, for anything that you imagine. There's no restriction. It's your money. And so being able to leverage that cash, that big pool that you have, will actually stay intact because it's a loan. So let's say you've put money in that over the course of 10 years and you have $100,000 in a policy in cash value, and you want to take advantage of a new opportunity that comes up to buy an investment property. You can take a loan out from the 100,000. So let's say it's 25,000, and you can use that as a down payment. By taking that loan, it's not actually withdrawal from the 100,000. So that $100,000 continues to get the compounding growth, the tax advantages, the liquidity, and the protection that you have there. And so you can see how investors really love that, because they're almost double dipping. They're getting guaranteed growth no matter what. And now they're able to use that cash to make other investments. And there is a small expense that you get charge for accessing that loan, but basically you're able to double dip there. And that's where it can get really, really powerful from a kind of an investment strategy as well.
Right. So for everybody who, and we've talked about it, for some people it's SDIRAs or even solo 401ks. Those are options that people are using, but this can provide you even more liquidity and more flexibility as well. So that's why for people who already have these sorts of things on their radar, or they're trying to use it, there are still restrictions. In SDIRA, there are a lot of prohibited transactions that you cannot do, and you're not looking at the same prohibition with a type of life insurance policy like that. And so, guys, we've been talking here with Sean Adams of Leverage Life Management. Just wanted to remind you about that. So tell me about, what do you think is the hardest hurdle for people to get over? When you talk to them, what's the number one thing that they're like, but what about this? And then, I guess your number one objection when you're trying to talk to people like this, or they're trying to weigh this against other options.
Yeah, the first thing is that it's life insurance. So when people hear that, they kind of go, ugh, I got this agent who's going to be hard selling me and trying to get me to go get a coffee with him, and he's going to pressure me into all these things, right? So there's a lot of just inherent things to overcome from the industry, a bad stigma about it. And that really comes from 70 years of this product being sold incorrectly, right? And so basically the way that these things are structured for average Americans, it's been done as purely a death benefit, a hedge against you passing away. And so people are paying exorbitant amounts of money just so that their spouse, their children are covered if they die. But they didn't recognize, or the agent didn't know, and I talk to agents all the time that have no idea how they can actually structure these and design them properly so that there can be living benefits, that cash value component as well. So coming over the life insurance part to start with, that's piece one. I would say the second piece is when I say there's a guaranteed minimum rate of 4% as the floor, right? Totally uncorrelated to the stock market. And people go, Sean, okay, 4%, I can get 9% in the stock market, and they blow it off. And I go, well, hold on a minute, because we're not really talking about this as an investment. The way that we look at this is more of a warehouse, right? Because what ultimately happens when people have their savings, it normally sits in a bank account, right? That's where it starts. And then they disperse it to their various investments. And what they fail to realize when it sits in a savings account that's getting 0.1% if you're lucky growth, right? It's actually eroding. Because inflation is happening, you're losing money every single year to your money sitting in one of those bank accounts. And so the logic here is to go, okay, well, instead of it sitting in the bank and then you moving it into the stock market, your 401k, whatever it might be, What we suggest, and the way that this is used by ultra wealthy people and corporations, is to put that cash into the policy first as the warehouse, the place where the cash sits, right? The cash has to sit somewhere. Why not be in a place that at a minimum gets you 4% growth? And then you can deploy that cash into a real estate deal, into a stock market, into the latest cryptocurrency, or whatever you're interested in. So it's more of shifting from, I've got my guaranteed safe house at 4%. Now I want to go deploy it elsewhere. So shifting that mindset between warehouse and investments is another big thing that we overcome in terms of initial objections.
Now, also too, once you get it into the insurance policy, if you take the money out of your savings, then you're only making your rates on whatever is in there at that day. So once you take it out, it's gone forever. You're getting no benefit from it. If you structure your policy correctly, you can take it out and still get the benefit from the other amount.
100%.
So it's a lot smarter to do it that way. If you're right now just having a checking and a savings and you're just putting it into the savings and you're like, well, that's safe. This is actually a lot safer and you get a much bigger benefit from it. And so I hope everybody understands that. And if you're like, I can't do this, I'm too small time or whatever, which I know a lot of people want to think that, even you guys that are totally not. And you're not just leveraging it correctly, but Sean and his group will do a free wealth audit. And so that's another benefit today that you guys are going to get, and you're going to see it at the bottom of the episode. So we're about at the end of our time here, Sean, for our little drive time show that we're doing. So I want to see if there's anything else you want to tell anybody or any of our EntrePods about how they can find you, or just leave us with a good tidbit before we go.
Yeah, Jennifer, you touched on something there about people not feeling like they're in an adequate position to take advantage of this. And it couldn't be further from the truth. There are certainly restrictions, and there's scenarios where this case works better for others. But if you have existing life insurance, whether that's term, whole life, or some other thing that you were sold and you have no idea how it works, we always encourage people to take advantage of the free wealth audit. You get on a call with myself and my team. We sit down and actually look at the policies you have in place. And what we're doing is we're actually peeling them apart and looking for opportunities where we can optimize if you have one. And if not, we can show you where, by running your own business and not having a safety layer like this in place, is extremely dangerous, right? And so there's a lot of areas where people are so over leveraged. If they were to get sick, if there was a chronic illness, if they were to pass away, God forbid, there's nothing in place to have a safety net. And if you think that your cash in a bank account is going to be that safety net, you're going to be in for a world of hurt when you start seeing the inheritance taxes and all the things that go into that, if that is your backup plan. So it's very worthwhile to look into where we're over leveraged and get a second set of eyes on seeing that sort of thing. Super advantageous. It's completely free. And we'll break down that whole strategy to give you an idea of how you can take advantage of it for your unique situation. Everybody comes in. Some people have $100 a month. That's all that they can afford. We have other people that have $100,000 a month and they're trying to liquidate and move things around. So regardless of your situation, that's why you want to work with someone who's going to actually cater it for your scenario. So that would be the best place to start. On our website, leveraged-life.com, we have a place where you can do your own research. We never like to pressure anybody into anything. We've got free educational videos, lots of content to warm you up to the concept. And then we always like to take that next step for those that want to deep dive. Work with myself, we'll actually go through and pick apart your scenario and show you where it's applicable or not, because of course, nothing's a 100% a fit for everyone.
Okay, well, you got it, guys. You're getting a lot of freebies today. And I want to thank you so much, Sean, for being here on the show and for being able to talk about this. We don't talk about it. I don't think we don't talk about the mindset enough that we need to, in order to make these shifts to do things that are a lot more beneficial for us. So guys, if you love the show, if you loved Sean and what he had to say, and you want to find out more, just go head on to wherever the listening platform you're on right now, and all the links are going to be below it. So, or you can go to www.leverage-life.com for those of you that are in the car listening to us, and that's leverage-life.com. And as always, I want to thank you, EntrePods, for joining us this week. You can just go to EntrePods.com. You can find us on every single listening platform or social media at EntrePods.com. And be sure to give us a 5-star review. That's how we keep on getting incredible people like Sean on the show and how we're able to help you. Don't forget, you can become a member of EntrePods. You can talk to me for free. You can even ask questions of any of our guests, and we'll even give private introductions if you are an Entre Pro. So thank guys again. You have an amazing week, and we'll see you next time. Bye-bye.
Thank you for listening, and please go give us a 5-star rating on your preferred listening platform if you enjoyed the show. This helps us reach more listeners like you and keep booking amazing guests. If you'd like to join our growing EntrePods community, want our social media links to like or share, or inquire about one-on-one strategy calls with our host Jennifer, please visit EntrePods.com. See you next time, and here's to you and your best life imaginable.